Hello traders! In this video, we are going to have a look at currencies traded on the Forex market. All currency pairs had the same structure. For example, if we have Euro-USD, Euro is called the base currency and the USD is the quote currency. For currency pair USD-JPY, USD is the base currency and JPY is the quote currency. If we are going to open the broker window with all available instruments, you will see the names of currency pairs and prices. As an example, when you see Euro-USD trading at 1.3, it means that you will need 1.3 units of the quote currency to buy 1 unit of the base currency. To simplify things, you need 1.3 US dollars to buy 1 euro. Because most of the world's countries are using their own currency, and the businesses are done all around the world, there is a high demand for a lot of these currencies. But some are more liquid than others. The most liquid ones are called majors. Because the number of currency pairs is almost the same as the number of countries in the world, we separate Forex pairs into 3 brackets: majors, minors, also called crosses, and exotics. Majors. Majors are the most traded and the liquid currency pairs. All of them are paired with US dollars, since of the US dollar makes 95% of the trades in the Forex market. So which currencies are the majors? Well, it is British pound and US dollar, also called the cable. The name cable comes from the fact that in 18th century, the exchange rate between US dollar and the British pound was transmitted across the Atlantic by a large cable that ran across the ocean floor between 2 countries. Next is the euro and US dollar, called fiber. The euro currencies, nicknamed fiber, has the least known explanation, but many say that it comes from the fact that the paper used for euro banknotes consists of pure cotton fiber, making it more durable and giving it a unique feel. Others are Australian dollar and US dollar, which we call Aussie. The New Zealand dollar and US dollar we called Kiwi. All these mentioned pairs start with foreign currency first and US dollar second. The last 3 majors work the opposite. The US dollar is in the first place and the foreign currency at second. We have US dollar and Canadian dollar that we call loonie. The loonie refers to the $1 Canadian coin and derive its nickname from the picture of solitary loon on the reverse side of the coin. The others are US dollar and Swiss franc, and the US dollar and Japanese yen. These 7 currency pairs are so-called the majors. Euro-USD is the most liquid and traded currency. In the second place, we have USD-JPY. Minors. These pairs are not quoted with US dollars, but between each other. Euro and British pound, Aussie dollar and Japanese yen, New Zealand dollar and Swiss franc, and so on. These pairs are usually less liquid, but offer a great opportunity to those traders that don't want to get exposed to dollar. Exotics. Exotics include currencies from all over the world. We can find there Polish zloty, Hungarian forint, Hong Kong dollar, Swedish crown, Czech crown, and there are many more. These are usually even less liquid than crosses and more suitable for longer-term position than day trading due to the higher spreads. Correlations. Some of major currencies are tightly correlated with both indices and commodities. Canadian dollar is positively correlated with crude oil. It is because Canada is a significant oil producer and exporter. That means that an increase of oil prices usually means an increase in the Canadian dollar value as well. Transfer this to the trading Forex when prices of oil go up and the US dollar CAD goes down. Similarly, the Australian dollar and gold have positive correlation because Australia is a significant gold producer and exporter. Both gold and the Japanese yen are viewed as safe havens in times of uncertainty, and these two are also positively correlated. Meanwhile, gold and the US dollar typically have a negative correlation. When the US dollar starts to lose its value amid rising inflation, investors seek alternative store of value such as gold. You also should be mindful when trading majors itself. If you are going long on euro dollar and going long on pound dollar as well, you are expressing the opinion that the dollar should weaken and those currency strengthen. But if the dollar gains strength, both the euro and pound will most likely go down. This can result in bigger losses than expected. Alright traders, this is it for this video. I hope you have enjoyed this video, and if you have any question or you are just interested in something, just let your comment down below. Don't forget to subscribe our YouTube channel, and I wish you steady study and see you next time.